Hello, Future Finance family, and welcome to a new video of FMTTM Future of Finance. Today, we're diving into the transformative power of artificial intelligence in finance. How is AI reshaping the way we predict stock market movements? Before we delve deep, I'd like to remind you that investing always carries risks, so ensure you consult professionals and do your research before making decisions. This video aims to enlighten and educate, not provide investment advice. The stock market, since its inception, has anchored global economies. Predicting its fluctuating trends requires analysis, intuition, experience, and now, technological innovation. With AI's ascent in the tech world, we're seeing promising changes in stock market predictions. This sophisticated tech analyzes vast amounts of data, captures patterns, and provides more accurate forecasts than ever before. Artificial intelligence, the buzzword of our generation. But what is it really? To comprehend AI's significance in stock market predictions, we first need to understand its core. At a fundamental level, AI is the pursuit of making machines smart, letting them mimic and sometimes even surpass human intelligence. Unlike traditional software, AI systems aren't explicitly programmed for specific tasks. Instead, they're designed to learn from data, and with enough data, make predictions or decisions without being explicitly programmed to perform the task. Two crucial components under the AI umbrella relevant to stock market predictions are machine learning, ML, and deep learning. Machine learning, ML, in a nutshell, allows computers to learn from and make decisions based on data. Instead of coding software routines with specific instructions to complete a task, the machine is trained using large amounts of data and algorithms that give it the ability to learn how to perform the task. In the context of the stock market, ML can analyze vast data sets of past stock prices, trading volumes, and other relevant financial data, learning patterns that might not be evident to human analysts. Deep learning, a subset of ML, employs neural networks with many layers, hence deep, to analyze various factors. It can sift through mountains of data, identifying patterns that might be invisible to the human eye. For instance, deep learning can analyze decades of stock market data, news articles, and social media posts to detect patterns and correlations that can influence stock prices. Both these technologies have proven transformative. They offer the possibility of more accurate predictions, smarter decisions, and a more profound understanding of complex phenomena. With the rapid advancements in technology, especially AI, stock market analysis has undergone a dramatic transformation. One of the standout benefits of AI is its real-time analysis. The stock market is dynamic, with a plethora of factors affecting it concurrently. AI can provide insights on the go. It doesn't wait for events to unfold. Instead, by continuously monitoring various information sources like news outlets, financial reports, and social media, it provides a real-time pulse of the market. Unmatched data processing is another feather in AI's cap. Consider this: a critical piece of information, like a geopolitical event or a regulatory change, can influence multiple stocks, sectors, or even entire markets. Human analysts might take hours, if not days, to sift through the data and gauge its impact. AI, on the other hand, does this in a matter of seconds. Lastly, risk management is where AI truly shines. Investing is not just about spotting opportunities but also about mitigating risks. AI tools, by virtue of their analytical prowess, can simulate a multitude of financial scenarios based on current and historical data. This not only helps investors visualize potential returns but also potential pitfalls. In essence, AI holds the promise of more informed, quicker, and, ultimately, more profitable trading decisions. But it's crucial to remember AI's limitations. Stock markets, often influenced by human emotions or unforeseen events, can be unpredictable, and no AI tool can entirely decode this erratic human factor. While AI tools are invaluable, they don't negate human judgment. In fact, marrying AI's analytical capabilities with human intuition often produces the most fruitful results. Lastly, as with all technology, AI isn't free from glitches. Outdated algorithms or potential bugs can influence outcomes, so constant updates and refinements are essential. Thanks for watching. If you found this exploration into the world of AI and stock market predictions intriguing, give us a thumbs up and subscribe for more insights. Your feedback drives us, so drop your thoughts in the comments. And remember, stay informed, stay ahead, and see you in our next video of FMTTM Future of Finance.